Hello bankers, a very good evening to all of you. Welcome back. Welcome to JAIIB AFM Prep. So guys, in this particular session we are going to discuss around unit number 13 from module B, which is the second number unit from module B, which is all about your preparation of final accounts. Okay, so when it comes to final accounts, which basically include your trading profit and loss account and balance sheet. But to prepare that profit and loss account, we need to prepare trading accounts. And to prepare trading accounts, we need help from trial balance also, right? And you can expect some numericals from this particular unit as well, and even applied questions. So first we will be discussing the theoretical aspect or the concepts which is required to solve these particular numericals, and then we will be discussing around the your practice and others, right? So, preparation of final accounts, which include preparation of trial balance. I hope you guys remember this particular one because this we have already discussed in our module A. So, module A, unit 5 was all about trial balance, that gross, net, and compound. Okay, I hope you remember that format also. Okay, I'll give you an idea. Then, adjustment entries and preparation of financial statement from trial balance, which include your trading. Basically we will be discussing around the three major accounts. One is trial balance, another one is your profit and loss account, and balance sheet, which we have discussed in previous session itself. So we'll be revising things with that particular one. All right, so this is something which is core concept part of this particular one. There was one process which we discussed during our introduction phase. So when it comes to the entire accounting cycle, it start with the recording. So recording, which we generally do in a chronological order with the help of journal entries. Then after recording, we classify different accounts in the form of or in the name of ledger, and moving things from journal to ledger, it is journalizing. This is called posting. Then after this, we prepare one accounts which is known as summary. So summary, which is generally which is a summary, or when it comes to summary, so it is something, it is generally known as trial balance. Okay? So the format of trial balance is particulars. Okay? So particulars, then we have ledger folio, then we have debit column, and then we have credit column. Okay? And the total of debit should equal to your total of credit. Okay? Debit and credit should be equal because we are following dual aspect of accountancy. So this is trial balance, and trial balance is generally a summary of all the ledger accounts. Okay? It's a summary of all the ledger accounts, and if you achieve this particular one, that means you have achieved the arithmetical accuracy. If there is some differences, you have to sort out those particular differences with the help of trial balance, suspense account, and you have to do the rectification entries and all. So if there are some errors in that particular book itself. So now with this, with the help of trial balance, just after this, we prepare, we start journey to prepare profit and loss account. Okay? And to prepare profit and loss account, first we need to prepare trading account. Okay? So when it comes to trading accounts, with the help of trading account, we will get to know about the gross profit or losses. Okay? So a trading account will let us know about the gross profit and loss account. Just after this, we will be preparing our profit and loss account. So profit and loss account. With the help of profit and loss account, we'll get to know the net profit or losses during that particular period. Then just after that, we will be preparing balance sheet. So when it comes to balance sheet, it is your assets and liabilities. Liability side, we have outside liability and equity, and here we have all the assets of the business. Then after that, or after preparation of this, we go for, when it comes to final reports, which include one another report, which is your cash flow statement, right? So this is the journey in this particular session. From trial balance itself, we will be preparing trading accounts. When it comes to trading account or the gross profit, how we calculate your gross profit, it is equal to net sales minus cost of goods sold. ठीक है, net sales minus cost of goods sold. So net sales is equal to sales minus or gross sales minus sales written or any discount allowed by the business, ठीक है, or by the company. So you have to deduct that one. Cost of goods sold, when it comes to cost of goods sold, it is equal to opening stock plus purchase minus closing stock. If other direct expenses are given, you have to add those particular one. Okay? So cost of goods sold is equal to direct cost. Okay? So direct cost which is involved in the production of that particular goods or rendering the services. Like let's say in case of this market, let's say the raw material, the plastic and others, or the labor who directly involved in this particular one, and the manufacturing overhead. Okay? The amount which we are using in the premises where we are manufacturing this one, right? So this is your gross profit. Okay? Then after that we prepared net profit. So net profit is equal to gross profit plus your other income which will include income from commission, dividend, interest and others, and minus indirect expenses. ठीक है? So indirect expenses means like let's say this office and administrative expenses, or money or the salary paid to the sales executive, advertisement cost and others, they generally comes under this one. Then after this, whatever profit and loss is remaining here, so we prepare one account that is called profit and loss appropriation account, where we distribute that particular profit, and we carry it forward the remaining amount to our balance sheet. Okay? So this is the entire journey which we are going to discuss in this particular session. Okay? So now what type of question you guys are going to face? There will be some statement based question around the concepts or the fundamentals around these areas, or two or three basically. ठीक है? So this topic is bit important, 4 to 5 marks. So two, on an average, two questions for 4 marks or 3 marks. It can be, mostly it is 3 marks, but it can be up to 4 marks also. ठीक है? So where in one question for 2 marks, they'll ask you to calculate based on the given data. You have to calculate gross profit as well as net profit. The another question is around most of the time, that is your cost of goods sold calculation. ठीक है? That remain maximum time. ठीक है? So we will be practicing all these particular. But understanding fundamentals is very, very important. Practice, we will add one more session, but understanding conceptual part is very important. So your or our primary goal and objective is to understand or to build our core understanding around these particular things. All right, so let's start the discussion with the first thing. Okay? So when it comes to the final accounts, okay, so final accounts, like we have trading accounts, we have through trading accounts we'll get to know gross profit, okay, or losses. Then when it comes to profit and loss account, with this we'll get to know net profit or losses, right? When it comes to balance sheet, it is also known as position statement. In previous session itself, we have discussed the equation, which is asset equal to liabilities plus owner's equity. Why assets are always equal to liabilities plus equity? Because from taken liability itself, we generally create the assets. Okay? So there was one questions which somebody asked in group itself. I'll just explain that particular question. Okay? So there was one question around the just a minute, huh? Wait, it's okay. Somebody have deleted that one. Okay, it is not getting updated. Just a minute. So there was one question around the I got that particular one. Yes. So some M sir or somebody, ki which of the following represent a claim against company's asset that must be repaid? So when it comes to this particular one, liability is your right answer. Why it is liability is the right answer for this particular question? See guys, so this is this liability which is also known as outside liability. Again, outside liability. outside liability. Why it is called outside liability? Because we have raised this particular one, we have borrowed this particular money from outsiders. Like we have borrowed money from bank. Suppose that there is a term loan worth rupees 5 crores, or there is a bonds worth rupees 10 crores. So these all are outside liabilities. Okay? So this is something which is like, see, the other portion is equity, which is money contributed by owners. It can be promoters or it can be shareholders, right? So this is something where you are giving them ownership in the business. So they are like, when you get ownership, so your business, like you becoming owner of that business, means your sharing your profit or loss will be decided based on the company value. If company value will increase, your profit will increase. If it will decrease, your profit will decrease, right? But this is, you do not have any repayment obligations in this particular case, right? There is no obligations. But when you are starting a business, even if you are becoming part of that particular business, but when it comes to liability or outside liability, it is something which you had borrowed and you have made some sort of commitments. Ki we are like, while we borrowed this money 5 crore from bank, the bank is asking for a fixed rate of return for a fixed time duration. Or when you issue these bonds, they are asking that you are making some sort of promise to the lenders or the investors, we will pay you this much of rate of returns, which will be payable on half yearly basis. So these kind of commitments. So that's why this is something where we have the liability side aapka, and where we have obligations. And even if we'll go for the liquidation, so the first, they do have the first right to like when we'll sell those particular assets, so they'll get repaid, and they'll get the primary like right on that particular repayments amounts and all. I hope this is clear again. So this is something which is generally part of this one. And if you guys face any doubts, any areas, please keep sharing in the group. So like sometimes people, they generally answer those particular question. I just wait for the other also. Okay, at least somebody will answer. If not, I'll definitely answer for those one. Okay? So income statement, trading accounts, gross profit or losses. And when it comes to profit and loss account, it is net profit or losses, right? Position statement or balance sheet, asset equal to liabilities plus owner's equity, which include assets, liability, and that risk capital or the liability, the owner's equity, which is generally part of this particular one. Okay? So final accounts. Final accounts are those accounts that prepared by the joint stock company at the end of fiscal year, accounting year, or financial year. The purpose of creating final accounts is to provide a clear picture of financial position of the organization to its management, owners, or any other stakeholders. So they can make their decision accordingly, right? So this is the one, very basic one. So three major accounts which generally get involved in this: trading accounts, profit and loss account, and balance sheet. Now we all know the uses of all the different accounts, but to prepare these accounts we have to prepare trial balance first. Okay? So trial balance as on 31st March 2025. So we have particulars. Okay? So particulars, laser folio, we have debit column, we have credit column, right? So this is the format which we have already discussed in our module A itself. Okay? So now the total, let's say if your total is equal to both, okay? So that means you have achieved the arithmetical accuracy. So when it comes to trial balance, it is a summary of all the ledger accounts. Okay? And ledger we prepare with the help of your journal entries. And journal entries are first entries in the book of accounts, right? So basically now we are trying to interpret, or we are trying to create or summarize that data, those number of entries or those number of ledgers, so we can make some sort of decision, or we can make decision ki how what is the gross outcome of our operating activities, or what is the net outcome of our business activity, whatever sale and purchase we have done during that particular period, and how that net outcome, or how that gross net profit or losses going to make an impact on your assets, liabilities, and equity. So that is the objective of preparation of these particular accounts. Okay? So trial balance, this we have discussed earlier also. because there is no point to repeat all those particular things. If you guys are facing any issues, just do let me know. I'll try to help in this particular one. Okay? So trial balance is a report that lists the balances of all ledger accounts of a company at a certain point in time. Okay? So it is summary of all the ledger accounts can be called trial balance. Like let's say the summary means, let's say what is ledger is generally created, ledger accounts is generally created for all the individual which is generally interacting with that particular business. So now what is the outstanding status with that particular ledger? Okay, let's say we have did sale 1000 time during that particular period. So what is the total sale at the end or at the point when we are preparing trial balance? Or we did purchase, let's say 500 times. So what is the total purchase? We did a payment, we paid salaries during that period, we paid rents, we deal with XYZ, ABC. So we are holding all those particular transactions, their final balances in one sheet. That one sheet is generally known as your trial balance. Now, the trial balance data we will use to prepare our trading accounts or even your profit and loss in others. Okay? But before moving that, there is one small units which is given, a subtopic which is given in your curriculum, that is around the inventory valuations. Okay? So when it comes to inventory accounting, I hope you guys remember. So accounting standard 2. So we accounting standard 2 and Indian accounting standard 2, which generally deal with the inventory valuations, right? So basically how you'll let's say there is a company who is showing a stock inventory is part of your balance sheet. Again, they are showing that they have inventory of worth rupees 10 crores. So how you calculated that particular one? So as per these accounting standards, when where goods are interchangeable, so only two methods are allowed. One is your FIFO method. Yeah. So first in, first out method. Another one is weighted average cost method. Okay. Apart from this, we have one another method which is popular, which is LIFO. Okay. LIFO, but it is not used in the context of India. Okay. So we generally use these two as per these accounting standards. Okay. And basically, because we follow or our accounting standards, they are aligned with the GAAP, and even Indian accounting standard also aligned with the IFRS, not GAAP, sorry. Okay. When it comes to US GAAP, GAAP is linked, GAAP we generally allow. In case of GAAP, we use आपका last in first in. Means when US companies, they do their inventory valuation, they follow this. Apart from this, all rest of the world, because mostly they follow IFRS guidelines, so they use these two methods and all. And even in India also, we use these two methods. Okay? So inventory accounting is a critical part of financial accounting that involve tracking, valuing, and report on a company's inventory. It is essential for business that deal with the physical product, ensuring accurate financial statement and informed decision making. Let's say there is a company who is saying ki we have inventory of 10 crore rupees. So how we reach to this number of 10 crore rupees? So which method we have used while we calculate this inventory and others, that you have to disclose. Okay? Now all the three methods, how we generally use these particular one. Let's take an example. So suppose that all the three methods first we'll discuss, then we'll go through the concept part here. So when it comes to inventory valuation, so you have to follow accounting standard 2 or Indian accounting standard again 2, right? So inventory valuation is related to this, and as per these accounting standards, you have to remember this thing again. There are only two methods which is allowed, which is one is your FIFO method, first in, first out, and the another one is weighted average cost method. Okay? These are the two methods. LIFO is not allowed, but we'll understand LIFO also. So now see, let's say there is a business which did some transactions. They purchased, this is suppose that purchase entries. Okay? They purchase 10 units at the rate of 10. Okay? This is, let's say this purchase is done in the month of April. In the month of May, they did another purchase of 10 units at the rate of 12. And in the month of let's say there are only two transactions. We'll keep it simple, okay, right? So now like basically their sale is they sold, or their sale is supposed that 12 units. They sold 12 units. So this is the one. Okay. Now, if they ask you to calculate your inventory by using FIFO method. So first we will be understanding FIFO. Okay. So as per FIFO method, okay, so as per FIFO method, first in, first out. Okay, first in, first out. Your inventory will be, that means we have purchased how much? 20 units, but our sale is how much? 12 units, right? That means your remaining units are 8. Now 8, we all know we have only 8 units. So 8 units at what price? So in case of FIFO method, we assume that, or we take out the first in, first out. Okay, that means out of this 12, these 10 gone. Okay. Then remaining out of this 10, again 2 you have to minus. So that means that the remaining 8 units, 8 into 12 will be your answer for this particular case. So as per the FIFO method, your inventory will be this. Take a first case. Now the another case, if you solve the same question by using weighted average cost method. Okay, first we'll solve through the LIFO. LIFO methods. If you solve this particular one with LIFO, so we have purchased 20 units. Now you will not consider this. You will consider we have sold these 10 units minus 2 units from here. So 8 units, 8 units at the rate of 10. So the price will be definitely less than this आपका if you compare with this. So here your price will be high, here your price will be low. So that inflation adjustment will generally get benefited through the FIFO things. Okay. So now if you solve this particular one by using weighted average cost method. Okay. When you apply weighted average cost method, it is something the average price. So the average price in this case is 10 plus this 22. 22 divided by 2, which is 11. So your average buying is 11. Out of 20, you have sold 12. So remaining is how much? Your 8. So 8 at the rate of 11. So this will be your inventory by using weighted average cost method. Average you just have to do, right? So this is something, these are the very simple 3 methods which we generally use for the inventory valuation. And out of these 3 methods, these 2 methods which we have to use while we are doing the inventory valuation in our book. Nothing else. This is the one. So just make your understanding. Hope this is clear to everyone, and the outcome is your answer for this one. Correct? Hai? So now let's go through the discussion part so we can enhance our learnings. So we have 3 methods. FIFO, first in, first out. In case of LIFO, last in, first out. Weighted average cost आपका. So which is average cost of the buying and the numbers. So FIFO methods, first in, first out. FIFO accounting method assume that oldest item in inventory are sold first in, first out. When cost rise over time, usually the case due to the presence of inflation, FIFO result in lower cost of goods sold and higher ending of inventory valuation. How so? Let's say the our first 10 units at the rate of 10, and the second unit is आपका 10 units at the rate of 12. So while you do the inventory, so let's say we have sold 12 units. 12 units were sold. So now this is as per FIFO method, that means we have sold these one. Now while you are doing inventory out of this minus 2, so 8 at the rate of 12. So your inventory will be at higher side. So because see, this is more, why this is called relevant method, the inflation is growing. So accordingly, if you'll use FIFO method, your inventory valuation will be most of the time at higher side. So that this is the case, right? So this because the lowest cost inventory is sold first, increasing gross profit, while the highest cost inventory remain in the balance sheet, which is this one. Understood? The another one is weighted average methods. This method calculate an average cost for all inventory item available during the period. Average cost basically, it is effectively a middle ground approach that smooth out price fluctuation and simplifies the accounting. That means like 10 units at 10 and 10 units at 12. So the average of this is 11. So that's why we are considering that particular one, right? Next one, LIFO, last in first out. This method, which is only permitted under the United State Generally Accepted Accounting Principle gap, assume that newest inventory item are sold first. During the inflationary period, LIFO result higher cost of goods sold, direct cost, and lower ending inventory. Just refers of FIFO. So reducing taxable income, but also lowering the gross profit and higher ending inventories. Okay? So this is something, all the three methods while you do the calculations of your inventory valuation. Hope this is clear to everyone. Let's move forward. Now, while we come to the final accounts, so the very first account for a joint stock company which we need to prepare, that is your trading account. So as I told you earlier also, so when it comes to trading account, so we get to know about the gross profit. Okay? And how we calculate gross profit or losses. So gross profit is equal to net sales, okay, net sales minus cost of goods sold. So this is a very important one. Okay? There was in recent examination also there was a question around this one. Okay? So trading accounts, which is trading means buying and selling. Okay? So during those buying and selling activities or activities surrounding that buying and selling, what is the outcome of that particular one. Okay? So trading account is used to determine the gross profit or gross losses of a business which result from trading activities, are mostly related to buying and selling activities involved in a business. I'll give you an example so we can have more clarity. So let's say there is a business, there is a let's say we are selling this marker. Our selling price is suppose that 10 rupees, okay? And the number of unit we sold, sold is suppose that 100 units, okay? 100 units, okay? And the opening stock was suppose that 30 units, and the purchase is suppose that 50 units, okay? And the closing stock is suppose that the closing stock, and we have to increase these numbers, okay? Let's say it is also 50, okay? 50, and the closing stock is suppose 60. So we'll reach the right numbers. It is आपका suppose that 10, ठीक है? So 10 units. Based on these particular activities, if they ask you to calculate your if they ask you to calculate the overall gross profit of this particular business. So how you will calculate gross profit? Again, so first you will require gross profit is आपका net sales. So how you will calculate sales? So it is, in this particular case, your gross sale is equal to your net sales, because there is no discount is given, there is no other expenses are mentioned, okay? Or no sales return is mentioned, okay? So in this case आपका your selling price is 10 and your sale is 100. So 10 into 100 is equal to 1000. So our sale is equal to 1000. Okay? So this is your sale value आपका, ठीक है? So gross profit is equal to sale minus cost of goods sold. So sale is 1000 minus, now you have to calculate cost of goods sold. Okay? So cost of goods sold is, suppose that your opening stock is 50 and cost of goods sold is आपका, this is this is in prices also. These all are prices, sorry. So sale is, let's say आपका 100. I did some mistake is something ki like, then we have to ignore the selling price to calculate the sale, or else what we can do, we have to multiply all these by 10 marks. So let's ignore this particular one, keep this particular thing simple. Your sale is 100, your opening stock is 50. It is in term of monetary value. If you will solve in that case, you have to multiply all by 10. So your cost of goods sold. So cost of goods sold is equal to opening stock plus purchase minus closing stock. So now opening stock is how much? 50 plus purchase is आपका how much? 60 and minus closing stock is how much? 10. Okay? So that means your 60 0, it becomes 0. Okay? So it becomes 0. So why it is no sorry, it become आपका 100, it become 100. ठीक है? So it become 100 आपका 110 minus 10, it become 100. So your cost, this is also 100. So 100 minus 100, so your gross profit is 0 in this particular case. In our case or in this particular situation, our gross profit is 0. Understood? So this is the something where we generally calculate the things also, right? So we'll practice more question. In another word, trading accounts give detail of total sales, total purchase, and direct expenses relating to sale and purchase. Okay, so the formula which generally says net sales. So net sales is your total sales, which include if there is any sales written, so you have to minus that one, and if your company have given some discount to customers, you have to deduct that one also. Okay, two things. And your direct cost, which is directly attributable during the production of that particular product. Yeah. So purchase, your other expenses and others, or which is all your cost of goods sold, which is also known as your direct cost. And how we calculate cost of goods sold, that is your like sometime, so cost of goods sold is equal to, it can be like in two ways. One is your opening stock plus purchase minus closing stock. Sometime if you can see it like opening stock plus purchase plus direct expenses. Okay, they might mention some direct expenses minus closing stock also. Okay, so this is the case aapka which you have to remember. So gross profit is equal to net sales minus cost of goods sold. ठीक है? Net sales is आपका gross sales of the business. Gross sales, how you'll calculate gross sales? So gross sales is equal to selling price into units. ठीक है? So selling price into units. आपका first case, ठीक है? Of the business minus sales written if there is any product which got written. Okay? Discount and allowances. Okay? So like let's say how you'll calculate the net sales. So let's say there is a business, their selling price is 10 rupees, and now I'll take that case. Okay? Selling price is 10 rupees. The units sold, their overall sale in units is suppose that 100. Okay? And sales written is suppose that 10, and discount allowed is suppose that rupees आपका rupees 100. ठीक है? So this is the one. So if you have to calculate the net sales, how you will calculate? So your net sales is now, how you'll calculate net sales is equal to, first of all, your gross sale. Gross sales into number of units. So that is gross sales gross sales minus discount minus your sales written. Okay, so gross sales is how much? 1000 minus discount is 100 minus sales written units. Okay, let's say these are in units. 10 units, so 10 into 10, 100, again 100. So what will be your correct answer? 800 is your net sales. So your net sales in this particular case is how much? 800. So this is the very basic formula in which you have to understand, right? So this is something, and cost of goods sold is direct cost. आपका ठीक है, direct cost regarding the production, and I have told you the formula also, right? चलो, now or even this is the case. Like I'll give you an example. Let's say so you do not get any confusion. Let's say opening stock is 5 lakh. ठीक है? Purchase during that period is आपका 10 lakh, and closing stock is suppose that 2 lakhs. ठीक है? So if you have to calculate direct cost of this particular business, so what will be your correct answer? Opening stock 5 lakh plus purchase 15 lakhs. ठीक है? 15 minus 2, 13 lakh is their cost of goods sold. So cost of goods sold is equal to 13 lakhs. If they have given some direct expenses, specifically they have mentioned, so you have to add this in this particular case. As simple as that, right? Next one. So this is something which is your format. Okay? So opening stock to opening stock, first one. Okay? So opening stock, then we have purchase, less purchase written आपका. ठीक है? Then direct expenses like freight and carriage, custom and insurance, wages, gas, water, fuel, factory expenses, royalty on production and all. ठीक है? And this is your debit side. ठीक है? Credit side we have, this is your credit side. We have by sales, sales written, or closing stock. Okay? Sales or sales written in closing stock. So this way you have to calculate this one. Okay? Let's say, let's give some numbers to these figures. Okay? Let's say the opening stock to this is suppose that the total of this side is suppose that 2 crores, 2 crores, and the total of these this side is suppose that 5 crores. Okay? So that means this business is in profit. Okay? Their credit side is higher than their debit side. First of all, basic rule. The another one is the profit is 3 crores. Now if you have profit of 3 crores, whatever profit you have generated, so that will be part of this one. Gross profit carried down, here you will mention 3 crores, and this will go to your profit and loss account. When you will start your profit and loss account entry, that will start from the gross profit carried brought down from your trading accounts. So your profit and loss account entry will start from this particular one itself. So this is the very simple one. Okay? So these are the direct costs. The direct cost of this business is आपका 2 crore. Okay? So this is also known as your direct cost, or direct cost, or this is also known as what? Cost of goods sold, right? And this is their net sales. This is called net sales. So this is net sales of the business, 5 crores rupees. The gross profit is your net sales minus cost of goods sold. So 3 crores this. If the situation is reverse, so let's say this is 2 crore, this is 5 crores, that means this business is in loss. They accounted a gross loss, and that gross loss you will mention here. Okay? So here you will mention to gross loss carried down. So that gross loss, and when you'll start preparing your profit and loss account, your first entry will with the loss itself, which you have accounted in your trading activities. So that is the one. So this is your format which was given in your book, similar to that. So trading account of ABC company for the year ending 2025, let's assume, 31st March 2025. The opening stock, then purchase less return, carries, cartage, dock, wages, duty, freight, cleaning, other charges. So these are the ones. So then we have here sale, less sales return, closing stock आपका, by then let's say if I give numbers to this, sorry, uh, let's say this side number is let's say this side number is 10 crore, and this side number is suppose that your let's say it is 25 crores. So the business is again in profit. This is credit side, this is debit side. This is your debit side, this is your credit side. So the here you will mention to gross profit transfer to your profit and loss account. How much amount? Your आपका 15 crores. So your amount mentioned will be 15 crores. So while you go to that particular one, while you prepare that profit and loss account, you'll start with this particular entry itself. That I'll show you just after this. So this is all about your gross, your trading accounts. Now the next account is आपका profit and loss account. Keep these particular things simple. If you want to make it complicated, it will be complicated. So just follow the sequence, you will be able to solve every question, believe me. So now profit and loss account. So with this particular with the help of profit and loss account, we get to know net profit or losses. We get to know what? Net profit or losses. So now how we calculate net profit? So net profit is equal to gross profit, which we calculated with the help of trading accounts, plus other income. Other income means आपका income from let's say we receive dividend, we receive some commission, we receive some interest. Apart from that, operating income. That gross income is also known as operating income, sale purchase activities. So minus indirect expenses. Indirect expenses, because in case of gross profit, we have kept only your the direct expenses. So all indirect expenses will be part of this particular one. How? So this account is prepared in order to determine the net profit or losses that occur during accounting period of a business concern. So net profit is equal to gross profit minus expenses plus other income, or you can reverse these two up. Okay? Next one. So net profit can be determined by deducting business expenses from the gross profit and adding other income obtained. So this is the explanation of this particular one. So how you are going to start this particular one? Let's say our gross profit. Let's say in that, but how they'll ask question? Ki like they'll follow this question. Okay? Let's say first they'll ask you to calculate the gross profit. Or even there was one year when they asked both the one. Okay? What will be the gross profit and net profit of the business? Then they'll give you two options where first is given gross profit, then net profit. Very simple one. Okay? So let's understand this format first. Okay? So when it comes to the आपका profit and loss account, okay? So this is the profit and loss accounts. So when it comes to profit and loss account of a business, okay? So here we have again, this is your debit side and that is your credit side. So that profit, gross profit brought down from your trading accounts, which will come here if you are in gross profit. If you are in gross loss, so your entry will start from this one. Okay? Your entry will be by gross loss brought down from your trading accounts. That amount will come this side. Then bank, the other income, okay, this is your gross profit plus bank interest, discount received, commission income. So that is the part of your credit side of your profit and loss account. When you'll come to the debit side, okay, so this is your debit side. So these are the entries, your debit side. Okay. So debit side, indirect expenses like salary paid to office administrative people, rent, office expenses, bank charges, bank interest paid, electricity expenses paid, staff welfare or employee benefit, audit fee, repair, commission, sundry expenses, depreciation. Okay, so these all are this one. So then the outcome. Okay, so then you have to decide or find out the outcome. Okay, let's say the total of these many entries. The total of these many entries is suppose that let's say it is supposed that 30 crores. Okay, this is 30 crores, and the total of this side till here it is supposed that 25 crores. Okay, 25 crores out of these particular ones. So again we made a profit. Okay, so we made a profit. So that profit you will mention this side. Okay? So opposite side. So we have to balance the figures. Okay? So we have like this is 30 lakhs, 30 crores, and this is 25. So profit you have to mention it this side. Okay? Net profit transfer to balance sheet, which is how much? 5 crores in our case. So it will become 30, and that is already 30. If it is loss case, if it is a situation of loss, so you have to mention this. Okay? That side, another side, right? So this is all about your profit and loss account. These things you will understand better with the help of questions also. We will be discussing those questions. So now the another one is the third report, which is balance sheet, which we have already discussed in our unit number 12. Okay? Believe me, once you will come to the questions part and all, you won't miss. Okay? So balance sheet is asset equal to liabilities plus owner's equity. And why this is? Why so? Because we have to follow the entity concept. Okay? Entity concept means business entity concept basically. Okay? So let's say that Mr. X who started a business XYZ Limited with 5 crores. I gave you this example. Okay? So money contributed by owner is liability on the firm. So this will come here 5 crore rupees equity. Okay? Risk capital, it is called risk capital. And this side it will be cash. Okay? So 5 crore, 5 crore. Then the other entries and others that remain same. So balance sheet is a financial statement report company's asset liability in this. The other one, yesterday only we talk around this one. Okay? Current asset, current liabilities, everything is same. And the format, so now all the three formats quickly. Okay? So this is your trading account for the year ended this. So opening stock, then we have these particular one which we have discussed this. Then after create with trading accounts, we get to know about the gross profit or gross losses. Then we prepared your profit and loss account for XYZ Limited for the year ended 31st March 2025. So here, this side we have gross profit carried over from the your trading accounts. From trading accounts, this is the number. And if there are some indirect, if there are some other income, you have to add those particular one at credit side. this side आपका ठीक है, all indirect expenses, debit side आपका ठीक है, these all indirect expenses ठीक है. So the difference आपका, let's say the right side means let's say this side the balance is 50 crores ठीक है, the overall total is 50 crores, gross profit was suppose that 40 crores, 10 crore was other income ठीक है. Then this side, the total of this side is suppose that let's say it is आपका 40 crores ठीक है. So 40 crores, that means we made a profit of net profit of 10 crores, then your balance sheet will equal sorry, yes, both side will become equal 50 crore 50 crore. So you are in a profit, and this profit we will transfer to our first we'll deal with the profit and loss appropriation account, where we'll divide or distribute this particular profit, or we'll share with the, or we'll transfer to the balance sheet. Okay? So credit side of the account shows the following items, and debit side shows the following item. This is about the your profit and loss account. Okay? Sometimes they ask these kind of question. Balance of surplus brought forward from previous year. Net profit, sorry, it is from for the balance sheet. Again, amount withdrawn from the general reserve and others, income tax. So transfer to reserve and surplus, debentures, redemptions and others, which is generally part of this one. So balance sheet of ABC on 31st March this. So particulars means this is your liabilities and these are your assets. The same things we have discussed, but it is given in your book, so you guys can get some sort of confidence. So capital, money contributed by owners or liability, equity, long-term liability, short-term liability, the obligations on the company. So in the term of bank loans and others. Then we have asset side, we have non-current asset, long-term asset like property, plants, equipments, goodwill, patent, copyrights. These all are current liability, current assets. Cash, stock, receivables and others, they are generally part of this. Okay? So this is all about your the core concept which you require to pass or to achieve those 4 to 5 marks from this unit. If you have understood this now, guys, believe me, you guys are going to score very good marks in your upcoming examination. Let's practice. First, you know now you know the core concepts. Now you have to apply this one. Okay? First time maybe you will do some sort of mistake and all, but while we come up with again and again, we'll practice all these particular things now. You guys are going to solve all these particular one incorrectly. Okay? So which of the following statement is true regarding the preparation and purpose of trial balance? So first one is the trial balance is prepared after all ledger accounts and balanced and is used to ensure that total debit and credit balances match. 100% true, arithmetic accuracy. A trial balance is primarily used to identify mathematical errors in the accounting records, which has balance become less critical with the use of modern accounting software. Yes, because the chances are very less. Adjustment entries are posted to correct errors made during the accounting period and do not involve any balances in balance sheet. No, it get involved in balance sheet also. The second line is wrong because, like, let's say if there is something around the depreciation or some other expenses which directly move from trial balance to balance sheet, so that will be part of this one. So this is wrong. 1 and 2 means आपका option A only should be right answer for this one. Rent payable and prepaid expenses, sorry, not depreciation is get handled through the, that is an operating expense which is part of profit and loss account. Next one, which of the following statement about the preparation of financial statement and depreciation is correct? Next question is around depreciation itself. So profit and loss account and balance sheet are prepared to determine the cash flow of the business. No, they are not. For cash flow we do have a separate statement which is called cash flow statement. These are net profit and losses and the position statement, right? Depreciation is recorded as an expense, but it is not a cash expense. This is also wrong. Depreciation is recorded is in not a cash expense. 100% true. Sorry, but it is not a cash expense. That is 100% true. We generally accumulate that one. Accumulated depreciation is credited in a book of accounts when depreciation is recorded. Yes, 2 and 3. B will be right answer for this one. Correct. Next one. Which of the following method is not permitted under Indian accounting standard 2 or even accounting standard 2? So what will be your correct answer? LIFO. Okay? So FIFO and weighted average are generally part of the your as per these accounting standards. Basically Indian companies, while they do the inventory valuations, they have to use these one. Okay? So this is the detail which we have discussed earlier also. This detailed question wise discussion we'll do just after once we're done with all the 35 units of your book now. So there was one Jaitu sir asked me for this one again in the group itself again. And sometime I also that static part, the data part, which I always try to cover up with the questions. So what we will do, yeah, once we have done with this time or in this first set, our primary focus is concepts. Okay? So in the another set, we will be discussing all the questions in detail. So you do not have to worry around anything. And if you guys having any suggestion, please feel free to reach me. Huh? A company has following detail for the year. Opening stock 5,000, purchase is 25,000, carries inward 1,000, carries inward. So that is direct expense. If it is outward, that is indirect expense. Okay? Sales आपका 30,000, closing stock 7,000. So what you have to calculate? You have to calculate the gross profit. So how will calculate gross profit? So gross profit is equal to net sales minus cost of goods sold. Now in this case, your net sales is 30,000. 30,000 minus cost of goods sold. How we calculate cost of goods sold? Cost of goods sold is equal to direct cost. So direct cost, opening stock plus purchase. 30,000, 30,000 plus 1,000, 31,000. Again, it is part of direct expense. 31,000 minus 7,000. 31,000 minus 7,000 is how much? 24,000. So 24,000. So what will be your correct answer? 24,000. That means your answer will be 6,000. So 6,000 means option A will be right answer for this particular question. I hope you guys getting this particular thing. Yeah. So this is the one. Next one. Read the following statement about the preparation of balance sheet. The capital invested by our promoters is considered as liability in balance sheet. Yes, 100% true. A loan taken by business increase both assets and liabilities of the business. 100% true. Let's say um, first statement is directly related to your business entity concept. Okay. Second statement is from taken liability itself, we create asset. Let's say we have taken loan from bank worth rupees 10 crores. So liability will increase by 10 crore. Your asset will also increase by 10 crore immediately with current assets with cash. Okay. So that is the one. So both statements are correct in this particular case. Next one, guys. Read the following statement around the preparation of balance sheet. A profit earned by a business create a liability in the a form of increase owner's capital. 100% true. Okay. So let's say if we are in our business, let's say we make a profit of 5 crore rupees. So that 5 crore rupees will get added in capital's contributions. Okay. So let's say during financial year 24-25, we made a profit of 5 crore rupees. So while you move that profit from your profit and loss account to balance sheet, it will come which side? It will come आपका let's say this is the sequence. So this is your liability. Now this is your liability. So let's say here we have the other liability like term loan, bank loan, others things, bonds and others. Here we have capital. So capital, we have two type of capital. One is the initial contribution. Let's say they started this business with 5 crore rupees or 500 crore rupees. Now they made a profit that is called retained earning. Retained earning, whatever that amounts, it will come liability side. Okay? So this is the one. The Company Act 2013 prescribe a standard format for preparing balance sheet for no, not for all companies. So they like there are some specific companies. All like for banking, we do have a different format. So this is not the right one. The balance sheet shows the financial position of business by listing asset and liabilities. The balance sheet shows the financial position of this list. 100% true. So 1 in 3. 1 in 3 means option C will be right answer for this particular one. Understood? An organization prepare profit and loss account to prepare to get to know about the net profit or losses. Very simple. Which of the following is a correct calculation of cost of goods sold? Okay. So cost of goods sold is equal to purchase plus opening stock. No, it should be minus. Okay. So purchase plus opening stock minus closing stock minus expense. B only will be correct answer, right? No, B not B. Sorry, C will be right answer. Uh, आपका purchase plus opening stock minus closing stock plus नहीं, B will be right answer. Sorry, B only will be right answer for this one. Okay. So purchase, opening stock, closing stock plus expenses. Plus expenses. What I have done? No, C is the right answer. The formula is same, but we are using that bracket numbers and all. Okay, that's it. Nothing else. Right. Next one. Which of the from the following information, opening stock is 2 lakh, sales is 2 lakh 50,000, purchase is 1 lakh 50,000, closing stock 3 lakh, expense is 20,000. Okay. Consider this expense as a direct expense. Okay. It is a question error. Okay. Direct expense. Calculate the net profit or losses that we carried forward in balance sheet as on this test. Okay. So sales, purchase, closing stock, direct expense. Okay, if you consider this as an indirect expense also, there will be no issue with this, because if they have asked you to calculate cost of goods sold and others, then it will make impact. Otherwise, it won't impact. Okay. So 2,50,000 plus the sale is 2,50,000. Okay. So 2,50,000, 3,50,000, and 6,50,000. 6,50,000, 6 lakh. No, what I'm doing? What we have to calculate? Net profit. There is some error in this question or what? Opening stock 2 lakh, purchase is 1,50,000, 3,50,000, and closing stock is this. Okay, so first ignore this one. Okay. So if you calculate the gross profit, it is a sale, that is 2.50 lakh minus 2 lakh, 3 lakh 50,000, 3 lakh. Acha, okay, sorry. Why I'm adding that particular one? It will be solved, na? 2 lakh, 3 lakh, uh, acha, so it is 2 lakh, 3 lakh 50,000 plus 3 lakh 50,000 plus 3 lakh 70,000. Okay, 3.70 lakh. The overall, the minus closing stock is 3 lakh, so it is 70,000. Okay, so it is 3 lakh. So 3 lakh and 3 lakh, then sale is 2 lakh 50,000. So 50,000, no, I'm missing something. Opening stock plus purchase uh, uh, minus closing stock. So opening stock 3 lakh, 2 lakh, 3 lakh 50,000. So your cost of goods sold is 50,000, 50,000, and twin 50,000, 2 lakh 50. So it is 2 lakh, 50. Okay. So it is like it is minus 50,000. So it is 2 lakh. Okay, 2 lakh. This is, that means this is indirect expense. Okay. So 2 lakh minus 20,000. So it is 1 lakh 80,000. 1.80 lakh आपका profit. Net profit of this business is 1.8 lakh. I did some wrong calculation. See, very simple one. Sales is 2 lakh 50,000. Cost of goods sold, if you consider it at direct or indirect, won't affect. Okay. So 2 lakh, 2 lakh plus 1 lakh 50,000, 3 lakh 50,000, 3 lakh 50,000 minus this. So you're up 50,000, 50,000. Then we have 50,000 again. So then sales minus this, 2 lakh 50,000 minus 50,000 is 2 lakh minus 20,000. If you consider it as indirect expense also, so 1 lakh 80,000, that is your profit for this business. Okay. Yes, bilkul 100% true. So what will be your correct answer? 1 lakh 80,000 as a profit. If it will be this side, loss, that side, profit, credit side. Next one. When preparing balance sheet, which of the following items should be classified as reserve and surplus? This we will discuss while we come to the balance sheet, like when we'll come to the final account of a banking company. This question belongs to that one. Okay? So these headings of balance sheet are generally part of that one. Okay? Premium, securities premium will be right answer. So Depreciation appearing in the trial balance should be shown as expense in profit and loss account. Yes. Option B, it is an expense which is adjusted in profit and loss account. We just gone through this thing. Next one. Which financial statement provide a snapshot of entity's financial position? The balance sheet statement आपका ठीक है. Next one. If opening stock is 50,000, purchase is 1,20,000. So 1,70,000. Direct expense 30,000. 2 lakh. 2 lakh. Closing stock is 40,000. 2 lakh minus 40,000. 1,60,000. So cost of goods sold will be 1.60 lakh. That means option A will be right answer for this one. Okay? So opening stock plus purchase plus direct expenses minus closing stock. So your आपका option A will be right answer for this one. Next one, not D, it is 1A. Please do correct this one, A. ठीक है? 150,000, 170, 2 lakh, 2 lakh 40, it is 160. ठीक है? It is 160, not this. Next one. A company gross profit is net sales minus cost of goods sold. ठीक है? Sales minus cost of goods sold. Next one. Which of the following financial statement will show gross profit? Again, gross profit is trading accounts. Next one, expenditure which occur on a repeated basis. So they are known as revenue expenditure, recurring in nature. We do have one dedicated unit. We have discussed this one in our unit 7 of AFM module A, capital and revenue expenditure. Which of the following is not recorded in the trading accounts? Not recorded in trading account. So trading account will deal with the direct expenses. Carries inward. If it is outward, no. It is not recorded in trading accounts. So this will, inward is part of trading accounts. Salary, administrative staff, it is part of profit and loss account. Indirect expense. This is your direct expense. This is also a direct expense. This is also a direct expense. So these all will come under trading account. Salaries and of administrative staff come under the indirect expense. So that will be get adjusted in profit and loss account. Next one. The formula to calculate gross profit. So gross profit is equal to your net sales minus cost of goods sold. So net sales, opening stock plus purchase plus direct expenses minus closing stock. Okay? So option A only will be right answer for this one. Next one. Which of the following is an example of direct expenses in the trading book? Direct expenses in the trading book. Which of the following is an example of direct expenses in trading book? Advertisement, sales commission, freight inward. So C will be right answer. Your freight. All these are indirect expenses. So this is it. So this is all about your unit number 13, which is preparation of final accounts of a company. I hope you enjoy these particular things. I hope you get these particular things clearly. So if required, please rewatch this particular session because it is bit important. Why it is important? Because it will also help you while you study unit number 17, final account of a banking company. So that like things are same, but you have to align things account according to the financial firms and all. So and even the first one, balance sheet equation that we have discussed, that thing help you in this topic. These things will help you in upcoming topics, right? So this is something interlinked which you have to build. All right. So if you guys having any doubt, any queries, you can connect me on WhatsApp, Telegram, or app also. Again, I'll try my best to help you out with these particular one. And prepare well, guys. So focus on the concept part and all. And these concepts will also help you in CAIIB examination. So I'll see you tomorrow at same time. And we will be discussing our unit number 14, which is all about company account 1, right? So this is it. Bye-bye. Take care all. Have a nice day. Thank you.